more positive. Okay, so let's get going. Today is Tuesday, July 14th, 2015. This is your daily Forex trading strategy session. That's me. My name is Wayne. I'm a currency trader. Been doing this for a decade, more than that. Anyways, I've been doing this in a while, and I'm here to share. I'm here to help. I'm here to guide. I'm here to answer questions. Be a resource. I don't like saying I want to be a tool. So how about this? I'll be a resource for you. So let me help. The best way to get that is to participate and ask questions. I call that participation. The secret to success is not sitting here listening to me talk and saying, yeah, that makes sense. Yes, it makes sense. Yes, that makes sense. I get that. Yep, I understand. Yep, makes sense. Because obviously it makes sense, dude. And then you'd start trading on your own and you're like, I have no idea what's going on. I have no idea what's going on. I have no idea what's going on. Well, get in the game, ask some questions. Let's roll up your sleeves. Let's work. We have about an hour together. So you're the boss. I am the humble currency analyst. Let's work together, huh? Let's get going. All right. Trading and investing, both are risky, not appropriate for everyone. Past performance, good or bad, is not indicative of future results. So always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So a lot of questions about the pound. All right, so Carney and his crew, who's that righty, are testifying today. You know that. We discussed it on Monday. Good. All right. Is Carney a hawk or a dove? Let's just go for the facts. Hawk or dove? He's a hawk. Clearly hawk. And we've discussed Carney and his hawkishness, I don't know, 39 times maybe in the last 6 months. So, I mean, it's well established. So anyway, in fact, it started, the conversation with us, really, with his hawkishness, started when he was testifying, it wasn't even testimony, but anyways, when oil prices collapsed, it pulls down inflation numbers globally. It's probably why Iran's doing a deal now, because now they can't sell oil on the black market and get a half decent price. So anyways, oil prices are really down. I mean, they went from 100 all the way down to 40. Okay, now we're at 40 something now, right? Because of the Iran deal, that adds more oil to the global supply if that's allowed. So oil's down again, right? Fine. So anyways, Carney comes out and says, yeah. Inflation in the UK, very low, not good. We're not achieving our target. We've been spending all this money and we're not getting the results I promised you, but don't worry about it. I understand inflation's low, but I understand that it's a short-term issue related to the unbelievable collapse in oil prices, and it'll work itself out. There will be inflation. This is what he said. When there was no inflation, he said, don't worry about it. And this is a very conservative central banker. And remember, he's so good that the Bank of England hired him from the Bank of Canada. I mean, I still think that's amazing. Oren, I never said I wanted to short USD CAD. I only said we hit our target. Be careful with the language. You could, but I'm not necessarily there. You could be short-term short, maybe. Okay? So anyways, so we all know this. This is all a fact when it comes down to Carney. Carney is a super hawk, And so now he has to testify. What's he going to do? Come out and say, well, I don't know. The economy's not doing so good. I don't know. We're all sitting around here biting our fingernails. It's all hopeless. No, he came out guns firing. He said some good things. Boom. That's it. And this card's been on the table a while. And it comes and goes, doesn't it? Because there's nothing really to back it up except his word. But what he's trying to say is we're going to raise interest rates, before the Fed maybe, or certainly before Europe. I don't know. That if you took all the central banks around the world and you put them at a table, if you were to guess which ones are going to raise interest rates, in order, what order would it be? Okay, let's say Fed goes first. Maybe the Bank of England after that. Is Draghi going to raise interest rates, let's say, in the next 12 months? No, probably not. How about Australia? Are they going to raise interest rates in the next 12 months? No, probably not. How about Canada? Well, no, not with collapsing oil prices. Canada maybe before, but not now because of the commodity prices. So, okay, well, I mean, depends on some other things. So we'll put the Canada kind of in the middle of the road, before Australia, let's say. How about Japan? Are they going to raise interest rates? No, they're not going to raise. New Zealand, well, they're in the process of cutting interest rates. So, it's like you have the Fed and you have the Bank of England, and then all of a sudden there's not too many other in the company, right? So that's kind of where we are. So Carney comes out, makes a testimony, and boom. Now you look at that and that looks huge, right? It's not really that huge. It's just that nothing else happened while we waited. What's the purplish area? A very easy roll reversal that I set up yesterday. And let me back up. And it's based off that. Can you see the pattern? Double bottom, higher high, higher low. Right? Mark says sell, sell, sell. Really? Well, I guess you're off the 382. You could. We'll go into that. I'm not in that camp, but remember when we talked about the pound dollar versus euro dollar, I said, look, when the dollar's strong, I want to sell euro dollar. When the dollar's weak, I want to buy pound dollar. Okay. So Mark and Igor are like, they're bears. Okay, as long as you're a bear, you can do that. But I've never been a bear, so I wait for opportunities to buy pound, and I wait for opportunities to sell euro. So that's just my opinion. But I've been clear on that for certainly this year. Well, and it's the middle of July, right? So you know this, right? It's a solid fact. That's what I look at, right? So anyways, let's go over one pattern. Okay, there's the double bottom with a higher high. So a bull would buy off of this old resistance after the high, okay? Because catching the double bottom, which is identified here, is pretty tricky, and you have to be Johnny on the spot. And maybe if it's a weekly reversal pivot point or something, you could catch that one, and you'd be really long in here because there'd be a micro 1, 2, 3. Okay. But this is certainly a buy zone for a bull. Okay? Now let me go to the bear side, because there are some bears here. And you'll remember probably the analysis we've already done for the bears. You see what this is? Aha. Okay? Okay? Everyone else is saying, oh, but there's pivots there and stuff. Cool. Well, let me back out, because I haven't really done anything. The only thing I've done in the last 24 hours to my analysis was add the roll reversal. So, easy bull trade, right? Let me back out, add some more time. Do you remember doing this? I thought it would come down to this level of support, rise back up, and then drop. Let's make okay, put it in that context. And it fell even farther than I thought. Okay. So a bear now is selling off of this old gray zone, which was whatever it was, and I can back out more, but whatever it was, it was either going to act as support or resistance, right? So in this case, it kind of looks like the same pattern might occur here if you're a bear. Okay? What I think would be cool if you're not a bear is that we climb out of this zone here. So we have this move. That's what happened yesterday. Then today's move, maybe, let's say, it continues up into this cluster. You see all that action going on here? Down, and then up into this cluster. Okay? That's what a bull would be hoping for. And then, of course, hopefully higher, and we get above the 50% retracement, right? What if it does this? What if it does this? What does that do to the bulls? Yeah, that time for the Korean barbecue, right there. Yeah, that would put together basically this. Okay, on a higher time frame, and that we've made our way up to the 50%, and then we're making our way down to the next level. I made some fabulous, what do they call them, Libby? That's probably how a white guy says it. Korean ribs. They were good. Yeah. Korean barbecue is fantastic. You guys know what I'm talking about? Yeah. You know that Korean barbecue sauce? What I like to do is put that on salmon and barbecue that. There's a sweetness to it, and then there's a version of it that you can have with pineapple. So it's like a Korean barbecue sauce, which is traditionally a beef sauce. You can get sort of a one with sweetened up with a little bit of pineapple, and you put that on a salmon and barbecue it. Kalbi. Kalbi. Is that it? It doesn't sound right when I say it, but isn't it spelled? It's Kalbi. I'll have to look it up. But anyways, yeah, sorry, Mark. But yeah, oh, it's good. So anyways, reminiscence of the global barbecuer. So anyways, there's the technical analysis, and there's all different time frames, right? There's all kinds of time frames going on here. So this could work its way up, and I think if we clear this area, especially after the news, then we would have an upward move for a while. But let me ask you, if you were a long-term bear, even if, let's say, the Carney comments got us price action like this for the next few days, would you still be eyeballing this for a reversal pattern? Yeah. So to me, it's like, even if it goes up for the next 2 days, it still has an extreme high probability of falling. It is the beast it is. It's very much a game of patience. And what we're talking about now is fractal geometry again. And this is probably the most difficult thing to learn as a currency trader. It's probably something that you pick up near the end of your educational experience. Because inevitably, amateur traders, they're constantly chasing price. Whether you recognize it or not, you're chasing price. And and an amateur says, "Oh, well, it's been going up for 2 days, and so therefore up." But it's not up. It's just been up for the last 2 days, right? And they get caught. Okay. Igor says, "Would you self?" Well, the better trade may have been something that I'm not bullish on, because you have to remember, I'm I'm bullish on the Great British Pound versus everything except USD, right? Because what I was saying before, if the US dollar is weak, I might buy British Pound. But if British Pound is strong, that doesn't necessarily mean I'm going to buy Pound Dollar. Okay, so you have to put all of these things into context. Maybe, and so the proper one would have been to long this area, and unfortunately I missed it. Okay, but I did draw that yesterday, and I missed it. What can I say? But that was definitely viable. Okay. So that's that. So I think they're still flapping their gums at the financial stability report at the BOE. So we'll let them do their thing. Okay. Because it's you I see in the mirror. You want to buy this? See? Double bottom, higher high. 2155 cross. Yeah, I know what you're saying. On the pound, it's not the biggest move in the entire world, right? What is it, 100 pips? Igor says, "Isn't it too late?" Well, yeah, you could have bought the double bottom, but that's difficult to do, Igor. Okay, I just want to look at this chart the way that you see it. See, buying the double bottom, first of all, you have to have an amazing reason why you want to buy it. Already established. Because if you look at it, the 21 and the 55, they're down. The market's still technically bearish here. Okay? So I kind of look at it like this. Okay? That is what's going on in the market here. And you buy the double bottom. Well, that's aggressive. But again, if you have support even a blind man can see, and you're already established as a fundamental or long-term bullish, fine, take the shot and maybe hedge, because it's still high risk. But once you have the breakout, then the plan is clearly established. Okay, have it come down to a roll reversal, long it. Once again, if you're already a bull. Okay. Okay. Some of you said you're bears on euro dollar and you'd like to sell it. Okay, good. Where's the sell zone? Here's the sweet spot, the 382, the 50% and 618 Fibonacci retracements from yesterday's low to yesterday's high. Okay. So we're a long ways from that. Look at the London Open, huh? Sometimes you can't trade it on your own. Yeah. I mean, yeah, sell it higher or buy it short term, be short term long and long term short. Fine. Okay. But dollar is weak right now. Although we're on the 618 or near the 618 Fibonacci retracement on the Dixie. But that the sucker reversed right off of a pivot point. So it could remain weak for the rest of the day. That's fine. So that's that. It's looking nice. Somebody said, you know, about the Greek. Look, everything's been priced in now on the euro dollar. We've had 2 years to prepare. The no vote gapped us, what, 100 pips? Pfft, it's nothing. I've traded NFPs twice that. All right, Aussie. Okay. Sometimes you keep dreaming. Okay, double bottom. Higher high. What do? Yeah, Dixie is dollar index because the futures contract is DX. Igor says, wait a bit and long it. No. Man, I pick on you, Igor. It's because you participate, which is good. And I'm tough, in particular with language. I studied neuro-linguistic programming, so it's important stuff. Wait a bit? No. Draw a Fibonacci study? Yes. I know what you meant, but you didn't say what you should have said. There's a difference between waiting a bit and longing it. Draw a Fibonacci study and buy something near a roll reversal, ideally somewhere between the 382 and 118 Fibonacci retracement. Okay? Come on. Get over there, mouse. There we go. Okay? Difference. Okay? Mark's like, really? Buy Aussie? Look, it's just technical analysis. That could be any trade on any currency pair on the planet. Technical analysis is what I'm reviewing. Fundamentally, you might be bearish on the Aussie. Good. Well, then stop selling if that's the case, because that is a reversal pattern. So anyways, I want to go back to the Igor thing. Igor, I hope you don't feel like I'm picking on you, because I'm not. You're actually participating, and I'm doing my best to help you, because I will drill this into you until it's second nature, right? So if I was your drill sergeant preparing you for war, what am I going to be? Nice and polite? I don't have much time to work with you, and I got to get you prepared. No, you don't wait a bit and long. You draw a Fibonacci study, and you buy on a roll reversal, ideally somewhere between the 382 and 618 Fibonacci retracement. Boom. It's not wait a bit. That's too loosey-goosey. Wait a bit doesn't mean anything to me. Okay, so the pattern that you see with your mind's eye, right? Because in my book, I always talk about visualizing the trade before you see, before it actually takes place, and seeing it with your mind's eye. So once you see that, what your mind's eye sees is this and this. So therefore, if or when it happens, you recognize it because you've already seen it, and you're like, aha! That's my opportunity long. Okay. Are you quoting Officer and a Gentleman? Yeah. Where are you from, son? California. California! The only thing in California are queers and steers, and I don't see horns on your head, son, so what are you? Yeah, totally, huh? All right, so interesting. That's the pattern. If you don't agree with it, you shouldn't think that way. Like, oh, well, that can't be. Look, so, even if you're a bear, you must recognize that a bull is going to trade this. So if you're still short, you're short in a high risk zone, and that maybe you should have protected your trade. Maybe you should have cashed out. Because if once you saw the failure to make a lower low, you're like, oh my God, right? And then once it made above here, you're like, oh my God, right? And now you should be anticipating what they're doing. This is not complicated, because you would do the same thing if you were a bull. And it helps you identify areas of risk. And then you can ask yourself, well, if you're a bear on this sucker, where's the next level of shorting? Well, first of all, if I was a bear on this, I should probably recognize that the trend is at least, at a bare minimum, slowed down, right? Seems to me we're not in a bearish trend at all. That this is the trend. Okay. See how elevated this is on the hourly chart? Should you sell that? No. You see how elevated we are on an hourly chart? Should I sell that? Yes. What's the difference? How about this one? Should I sell this one? No. What's the difference? You have to sell at resistance first. First and foremost, it has to be at resistance. That's the first thing. If at resistance and the oscillator is overbought, like this, then sell. But we're not at resistance here. So it's worthless information. And this is another kind of area where amateurs get caught up because they're like, they think mechanically, right? They think, I have to trade the 5A crosses. Wayne told me to sell the stochastics when it's way overbought. No, I didn't. All it's measuring is the candlestick abilities to make higher highs or higher lows. So what you need first, in every situation, if you're a bear, in every situation you pull the trigger, you have to be at resistance. Okay? If you're at resistance and you're a bear, ideally, the oscillator is overbought. Now, this sucker will probably do this. Okay? So stand down, soldier. But you see, buying at the support wasn't a bad idea, was it? Buying at the support. It sounded like, I'm going to the Walmart. Buy me some jeans. And such. Going to the Walmart. Boom. So that's that. So we talked about this kitty cat. I want to go to the other chart, since it's the one we work with every day for the last 6 months. Well, that's oil. Look at that. Oil's still coming down. Amazing, huh? Just nailed it. Oh, here it is. So there's the pattern. We've hit the target now. Amazing, huh? Just amazing. These moves take weeks to hit. So anyways, we've hit the target. And somebody said, well, now I said to sell, right? No. You could if you're bullish on the CAD and bearish on the US dollar. But at the very least, a target has been achieved. And where does this magic target come from? It's just old resistance. So you have to remember that my opinions come from fundamental analysis. But when I'm trading technicals, there's no opinion. Right? There's just analysis. It's like reading music. There's no opinion. It's just those are the notes. That's it. That's how Beethoven wrote it. Play it that way, or you're fired. No, I'd like to interpret Beethoven. No, you're fired, right? No, just play the notes. That's what technical analysis is, right? Yeah, just sit down and play the damn thing. Okay. So when I'm looking at the charts, that's it. It's basically a fact. There's not much interpretation. The interpretation part is whether you're a bull or a bear. Okay, fine. But if you're a bear, sell bearish trade setups. Okay? So is this bearish? No, but you are at resistance. So you could, if you're already a bear, you could, I'd rather, as a bear, I'd rather be in a move like this, right? I'd rather be selling these areas. So yes, we're at resistance, but that doesn't mean you have to sell. If you wanted to sell, that would be a place to consider it, okay? But is the trend down? No, the trend's up. Fine. But you zoom in a little more, okay? Okay. And have we made a lower low yet? These are things I'd like to clear before I would be a bear, right? I think get probably something like this. But, you know, what's bullish about this? Things might change, okay, in time. And there is a big move here. Like if you move on the 15-minute chart, you might argue with me and say, Wayne, that's incredibly bearish. Really? You're right. It's bearish here, but it's not bearish here, is it? It's nothing. It's barely done anything on this chart. So just make sure you know what you're doing. So if you were going to sell, wouldn't it be cool to do that? And then it's going to come into here, isn't it? Why? Isn't that support? And if you're a bear, then you're going to sell off of this area. So it's going to go, Am I right? And then if you're bearish, it's going to break that. If you're not a bear, what's it going to do? Yeah, probably come down, get hung up in this area here, right? It'll do this for most of New York and then run out of steam. But I'm sort of burnt out on it. So let's go back to the actual chart. We've been long the USD CAD since May. Okay, it went to the top of the range. Okay, and then I believe we got out at the top of the range because we thought it will do one of two things, and the analysis is still there. But let me draw it first. We thought it would do one of two things: either come down to the bottom or make a higher high, higher low. Okay. And so I don't know if it'll let me zoom in anymore. It's so far away. Oh yeah. So it's close. Let me back out one click. You can see the analysis is still there, right? So it broke out. Different. Let's see. It broke out. Came back. Trapped in a small time frame. Bullish again. Cool. But now on a daily chart, we have the fractal going on. The fractal suggests this move. Now we had two trade plans because we knew and we know it from our planning. Okay, we don't know, but the plan is either it's going to come up, down, and we long here, or it's going to come down to this level and along there. We had two choices. First one never got a setup. Second one got the setup. Either way, we've played out a lot of patterns here. Okay? On high time frames, what we're looking at here is a daily, right? We're talking about this price action here. We traded over a course of like 6 months. And then from January to April, we were this way. And we consolidated and then reversed. And we're back to where we were a year ago. And so what do I think is going to happen now? I don't know. I think we're spent on this one. Right? I think we kind of played out a lot of this stuff. Should I ignore? Okay, you advise me now. Should I ignore scenario like it doesn't exist. What would you advise a client? Should I just ignore it? Like, yeah, that's not there. We'll worry about it. Forget about it. Okay? So it's a level of risk. Yeah, okay, Igor's got a plan. If it breaks through that, then maybe we buy the retracement. Cool. I like that. Okay? It could short term, right? It could short term kind of move down. Yeah. But we need a weak dollar. So maybe if the dollar goes weak for some reason, like the news comes out just super bad and everybody says there's no way the Fed's going to raise interest rates, okay, fine. Commodity prices should go up to increase the value of the Canadian dollar. But like this Iran deal, if we remove the sanctions and allow Iran to sell oil on the open market instead of selling it to China, that increases supply. So what happens to oil prices if we bring yet another player onto the market? Supply goes up, price goes down, Canada doesn't win, right? More oil increases supply, demand stays the same, prices fall. So anyways, I'm just trying to see the scenario in which the Canadian dollar gets ripper strong. Okay? I'm not ready to jump on that bandwagon right now. But you could trade it down simply because we're at resistance and it's made a low lower than this. I mean, that's a start, right? Okay, if CAD cuts their interest rates, yeah, we're going up, man. I'm going down in the burning ring of fire. Yeah, if Canada cuts, not sure if that would help Canada. So if you're going to do it, have a plan. Make sure you understand, right, what you're getting yourself into. You've identified this as a long-term resistance, and you waited patiently for it to at least make some sort of low. And so now, maybe in the next 24 hours, you get something like that. Okay, that's called a trade plan. Tee it up, boys. Doesn't mean it's going to happen. Set it up. Okay? But the main part that I was telling you is just because we hit my target doesn't mean I'm a bear. You could be. And if you're a trader now and you're just taking the trade, cool. We'll take it with as least risk, the least amount of risk possible. Okay. Kate, let's update ourselves on our friend the yen. Okay. It's looking better now. Do you guys remember drawing the channel? Wouldn't it be awesome if we got something like this? Right? Okay. Well, draw it, print it out maybe, make it happen. Plot a course to 125, command data. All right, so Igor's made a good comment. It's been stuck here for a couple of days. Well, what does that mean? Perhaps it means the yen is weak and so is the dollar. So if we can slowly fade this down and then get an opportunity to have a strong dollar again, then we get what we want. Because, it's a two-part thing. We want a weak yen and we want a strong dollar. Did you guys see the trend earlier today? Boom, 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 boom. Oh, 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 wow. Oh, 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 wow. Can't even fit it on this time frame. Do it on an hour. Anyways, let me draw it. Okay. Let's go from all the way here. Do 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 do. Whoa. You see it? I'll try to make it as thin as possible. So I've drawn it, and we've picked up this and this, and this, right? And this, and this, and that, and then all of this. Okay? So I try to capture. Now let's zoom in. Doot, doot, right? See? Top, drop into onto a 15-minute chart. See where we are? Beep, beep. First trade would have been in here, that 50%. Made a lower low. If you're on this frame, let's zoom in now. Doot, doot. Daniel, are you in the room today? Daniel was on that trade, or he was waiting for that trade. Now to add to this, it's a weekly resistance pivot point. If that's the top of the week, what's the target for the week? Weekly S1. So let's go find that. I think it's here. I got so many pivots. It's right next to the monthly S1. Buck, let's say buck 21-ish. Is that about right? Just so many pivots going on. Yeah, I got it. Thank you, Marky. You may also notice on the smaller time frame here that this was a level of support, right? Hey, Sammy. Okay. This is the next buy zone. But basically it's 1, 2, 3. All right. So kind of like this to that, and then maybe a change of trend in here, right? By the way, the Dixies are right on the daily 618.
Is 0.6 lower than expected, but backlog revised down 0.2 to 1.0%. X-Opposite at minus 0.1% is 0.6 lower than expected. Backlog revised lower there as well. Import price index minus 0.1% is 0.2 lower than expected. Backlog revised down 0.1 to 1.2%. Year over year at minus 10% is 0.2 lower than expected for import price. Canada Terranet at 1.4%. Month on month is up 0.5 from prior. Year over year at 5.1%.
CLAC, KLAC raising the dividend 2 cents to 52 cents from 50 cents a share. OCAT.
That was TradeTheNews.com. Thank you, Trade the News. Retail sales, miss. Good numbers out of Canada. So big miss out of the U.S. today. Big win out of Canada today. Perfect storm. So what you going to do? What you going to do? Got a pocket of pips and my homeboys do too. So now we're in this zone. Tee it up. So let's review what we've already reviewed. Let's go. We'll go, where's that Aussie dollar we did earlier? Right? There's the double bottom, 1, 2, 3, long, gone. Remember, somebody said, buy the Aussie? Like, it's just technical analysis, right? Just, that's it. Okay? But that's what the price action suggested. Okay? And that's all it's telling us you'd get on this move as well. I mean, it can go wherever it wants to go, but I wouldn't expect any more than that. Okay? Does that make sense, guys? And remember, this bottom I've already shown, it goes way back. So anyways, double bottom, higher high, higher low. Hammock! Remember yelling that? Hammock! Right? And then up. It's just price action. Don't confuse it with anything else. And if you don't like it fundamentally, then don't trade it. Wait for the trade that you want. Trade on your own terms. It may not happen today, might not happen tomorrow, but you'll get it. Let's see. Not much to say. Okay. So just remember, don't be caught where this thing drops and all you've been doing is staring at it going up. And you're like, man, I just never thought it would go up. And then, of course, now, and then it starts heading down and you're just like, oh, man, I waited too long. And you can just observer. Tim, it came from something I said where I said that I'm going to drill you guys like a drill sergeant. And if I was in command of battleship, that I would take you through the drills night and day, over and over and over again, while you're in the shower, while you're eating dinner, while you're trying to sleep. I would hit the sirens, and everyone would have to jump and run to their battle stations and go through the routine so that you could do it in your sleep. Okay? And I said that you would have to jump out of your hammock, put your boots on, and you could run down the hallway and duck your head under the steel doorways and climb the ladders, and your eyes are still closed. Because I'm waking you up in the middle of the night, and you could still get to your battle station as you've been trained. And when you see a double bottom with a higher high, or a double top with a lower low, you pull out a Fibonacci study, and it's just automatic. It's not even thought anymore. It's muscle memory. It's just, you see it, boom, it's done. That's why I jump all over Igor today. I'm like, no, I've never said wait a bit. It's like saying, hey, when you get around to it, why don't you throw some water on your face and rub your eyes a little bit, comb your hair perhaps, and then, saunter over to your battle station, right? When did I say that? Hey, when it's not too inconvenient, could you please, pretty please, go to your battle station? No. What I said is, you pull out a Fibonacci study, right? You pull out a Fibonacci study, and you look for a roll revolve in somewhere between the 382 and 618. If you pay attention, I almost always, except when I stutter, I say the exact same thing. You ever notice that? When you see a double bottom with a higher high, you pull out a Fibonacci study and you look for a roll reversal somewhere between the 382 and 618 Fibonacci retracement. When you see a double bottom with a higher high, you pull out a Fibonacci study and you look for a roll reversal somewhere between the 382 and 618 Fibonacci retracement. Oh, well, Igor, this happens, what? How many times do you think I've seen that happen, that pattern happen in 10 years? Yeah. So I never care what happened yesterday or 6 hours ago, because when it comes to trading, it's going to happen a million times more if you can just listen to me and learn it. Okay? So that happened yesterday. I drew this fib area yesterday. And I missed it. Well, what? So what? I missed it. I'll get the next one. I mean, it happens all the time. So what's important is that you listen to me and you learn it. Because don't worry about it, you'll see it again soon. I was training someone who now I've hired as a professional trader. I've given him a trading account. And one of the first things I taught him was to, in the idea of developing a skill, something that's repeatable. I said, you want to start with something very specific, because then you gain control, and after you have control, you have consistency. With consistency, you build confidence. And I said, I want you to look for a very specific pattern. I said, for the next 100 trades, I want you to look for double bottoms with a higher high or a double top with a lower low, and that is the only thing you're going to trade for the next 100 trades. And then when you're done, we'll review how you did. Well, now he's trading real money. It's a start, but they don't happen every day. They happen enough. If you could just learn this one thing, it might be enough. Now, ideally, if you learn this, you did it, let's say that's all you traded for the rest of this year, were changes of trend, then maybe next year you focus on a different pattern. So you do this and this other pattern. And if you're doing this 10 years from now, maybe you have 6 or 7 patterns that you feel confident in because you know how to trade them. You've traded them a million times. You know most of the time you make money on it, so you're very confident. And you got this skill, this repeatable skill. It's like you can drive fairly effectively. You can hit approach shots fairly effectively. If a ball lands in the sand, most of the time you know what to do. You're pretty decent at chipping. You're not bad at putting. That's only 5 things that you can do. Yeah, you make mistakes once in a while, but the vast majority of the time you're a pretty decent golfer. So, but what did you start with in your first year? I want to be a good golfer. I'm just going to do everything all at once, and I'm just going to get really good. I'm not going to take any lessons. I'm going to have really cheap golf clubs, and I'm going to hit old golf balls that have sat on the bottom of a lake for 2 years. And I'm just going to golf. I'm just going to go, 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 go. I'm just going to try everything. And if that doesn't work, I'm just going to wing it. Somehow I'll just naturally figure it out. It just sounds ridiculous. But you know what? That's 95% of golfers, isn't it? Like, my dad golfs more than 100 times a year. Did you know that? Now, he keeps telling me, I get these emails, he's like, oh my God, son, I'm such a good golfer. And then when he comes out, we golf, and he's exactly the same as he was certainly 10 years ago, maybe 20 years ago. And he loves it, though, and it's great, right? But like everybody else, he's a little bit better or a little bit more consistent, but generally speaking, about the same, right? So imagine, though, that let's say in the next 12 months, let's say instead of golfing 100 rounds, that's like 2 or 3 times a week he's golfing. What if 2 or 3 times a week, all he did was meet with a coach for an hour? Doesn't even have to go for a 4-hour round, right? 1 hour with a coach, and they practice very specific things. How to stand, how to swing with balance, how to follow through, how to aim, to have the right trajectory, to have the right angle on your backswing, and just how to chip, how to putt. Just all. Could you? Not even a driving range. That's probably even worse, right? That's why, one thing I like is the like a simulator, trading simulators. There's one that I used to recommend that is built right into MT4. It does some nice reporting and stuff. The upside is you can get a lot of practice. The downside is you can get really sloppy, and you can just practice bad behavior over and over and over and over again. And the driving range is kind of the same thing, where you take out the driver and hit 75 drives. But the problem is when you're golfing, you get one shot with the driver, and then theoretically you don't hit a second, right? And then you go through the hole, and then the next hole's a par 3. Oh, you don't use a driver. Next hole, okay, now we got a par 4. All right, driver again. But you've had 27 swings of other clubs since the last time you used a driver. I mean, it's not how it works, right? But anyways, do you understand? Like, if you, instead of golfing 8 to 12 hours a week, just going out and having fun, if you took 2 hours a week and just met with the coach and videotaped your swing and did analysis and practice, very specific things. You know how much you'd improve? It'd be phenomenal. And trading is no different. And if you keep doing what you're doing, presumably it's just, sitting down every day looking for a trade. And where's the trade? Let's pull the trigger. Let's get in a trade. You're not going to improve as a trader making lots of trades. But Igor, 98% of people don't practice properly on a demo either. They just trade. They just trade on a demo. Well, that'd be like going to diving range. Okay? So I would start, for example, on a demo account, would spend a focused amount of time trading nothing but this change trend, right? A double bottom with a higher high. And take notes on every trade. And you're going to do it 100 times. And you're going to take notes. You're going to take this very seriously. You're going to use scientific methodology. Is the trend up or down before the reversal? I mean, and you might say, well, the trend is down on a 1 hour, but it's up on a daily. And so which change of trend are you trading? The one in the direction of the 4 hour or the daily or the one in the hourly? And then what are the results? Which one won? Right? And just study that and then do the next one. And the next one, and the next one, and the next one. Take detailed notes, take detailed statistics, and be ridiculous in your analysis. And not there's the analysis of the charts, but the analysis of your trading. You understand? I would do whatever it takes to master this one pattern. I would do whatever it takes to master this one pattern. That's it. Nothing else would matter. There is no else. There's only that. And in 3 to 6 months, I can prove I'm a master. Statistically, because I could say, well, I got it down where, I'm catching, 7 out of 10 of these are profitable at some degree. Okay? Do you understand? Sickening, ridiculous work ethic. Not making lots of trades, feeling like you're a trader. Hey, look at me, I'm a trader. No, you need to master very, very specific things. One at a time. Don't worry about it. You'll get filthy, stinking rich years from now. Don't even try to do it now. Who cares? I mean, it's just even silly. If you can consistently bring in pips, there's more money in the world that will flow to you. There's more money in the world that you could ever possibly handle. Let me give you an example. If we're dropping the sanctions on Iran, do you understand how many millionaires in Iran have had money locked up for decades because of these sanctions will suddenly just flow into the market, look for investment opportunities. Do you understand that? Just this one thing going on today. I'm going to be contacting my guys in the Middle East and in Dubai and say, what's going on? Tell me about the sanctions. Are people getting ready to move money when it's legal and legit? Where's it going to go? Clearly, it's going to go to Dubai. And I know people in Dubai. I like me in Dubai. If it's legal and legitimate, it's good enough for me. Now, I've been in Dubai and people have offered me money and I'm like, whoa, whoa, whoa. I can't take that money. Right? There's already tons of it there. You got to be careful. When you're in Dubai, people offer you, hey, Wayne, I'll give you $10 million. I'm like, well, that sounds really nice. You'll need to wire it to FXCM in London. Was the old story, right? And they're like, oh, yeah, well, here's the thing. There's going to be like 10 different wire transfers from 8 different companies in 17 different countries and under 9 different names. And, and you're like, no, you know what? No, I can't take that money. But the Dubai's like that all the time. I've had a guy who's like, Wayne, I want to give you $200 million. I'm like, geez, that sounds really good. Just go ahead and wire it to FXCM in London. Oh, well, here's the thing. I got this money locked up at Deutsche Bank in Germany, and so I need you to have FXCM contact them, and I want it to work on a line of credit. And I'm like, oh, gee whiz, man. Something about Dubai. The most complicated money in the world, right? Well, suddenly, if these sanctions dropped in Iran, against Iran, and that money is now legal, legitimate money in Dubai, looking for investment opportunities, boy, would it be nice if you could say, well, I got a 3-year track record of success where in all market conditions, I very conservatively, with discipline, bring in, straightforward, consistent profit, something that you can count on. I could be your Forex trader. Okay? See, the money, there's money like that all around the world. There's lots and 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 lots of money. What the world lacks is the skilled trader that can bring in steady returns. And investors are not generally looking for crazy, ridiculous, I'll turn your $10,000 account into $1 million. I mean, that's not what people want to hear most of the time. What they want is the steadiness, the consistent, steady, and if that's 2% a month or 10% a month, whatever it is, it doesn't matter as long as it's consistent, because then they can sort of they can plan on it. They know, hey, if I give this guy $1 million, I can expect 2% return a month. He does it. Sometimes it's more, sometimes it's less, but it's very, very consistently 2% in all different types of market conditions. Maybe it's 3 or 4% in the prime time months. Maybe it's 1 or 2% in the slow months. But generally speaking, I can count on this guy to produce. So if I gave him $1 million at the end of the year, I'll probably have this X dollar amount at the end of the year. And I'm comfortable with that, and I can plan on it, and then I can fit that in my portfolio of all other investments. Good. Boom. That's all you need to do, guys. Do you understand the best Forex funds in the United States produce 2% a month? Did you know that? That's your competition. The best of the best produced 3% a month. So let me put it to you one other way, because I'm trying to drill home why you should be so focused on mastering very, very specific setups so that you have consistency in your trading because of control. And because of this, you can, using scientific methodology, you have confidence because you know that a certain, let's say, 68% of the time when you see that pattern, you know how to trade it so that it produces profit. Okay? Do you understand? And that over time, you'll get better. You'll have other patterns, but you have to have the control to have the confidence, right? You have to have control. So let me say it one more time. If you can learn how to master this pattern, and then maybe next year a second pattern, the year after the third, fine. If you can then take these patterns and produce 3% a month return, I don't care what amount of money is in your account. It's irrelevant. Okay? If you can find a way to produce 2 or 3% a month, month after month after month, relentlessly, consistently bringing in 2 or 3% a month, there is so much money out there in the world that is looking for you that you will achieve every financial dream that you've ever had in your entire life. And then you'll very quickly, because those are easy dreams to achieve, and then suddenly you'll have to like come up with a new dream, because you'll just all of a sudden you're like, I didn't think I'd ever get to this situation. But now what do you do? And then you realize those financial dreams are so important when you don't have money, but then they're easily achieved when you get the money. And then you're like, wow, those weren't even big enough goals to even to have ever dreamed of. I mean, just like, it's silly, right? It's just silly. I mean, so your $10,000 account suddenly is $1 million account, and or 10 million or whatever, but you're steadily bringing in 2 or 3% a month. It's great. It's great. I mean, it's great. That's all you need to do. I mean, boil it down to that. That's all you need to do for all your current dreams to ever come true. It might not bring peace on earth. It won't necessarily save sick children. But wouldn't it be nice to have a lot of money so that you could do something about those things? All you need is 2 or 3% return a month, month after month after month. How do you get that consistency? Through control. How do you have control? You look for very, very specific market conditions in which you pull the trigger, and the vast majority of the time you make money. Okay? I can't stress it enough. Making lots of trades just makes you a really lousy trader. Okay? How about like TradersWay? I work for TradersWay. They're a broker. They would love your business. This is why I'm here. I'm trying to educate you and teach you how to succeed. A broker makes money in 2 different ways. You fund a $5,000 account, you make a ton of trades, they make a ton of commissions, and then you blow up your trade account and you disappear forever. or you build a successful career as a Forex trader, and TradersWay stays your prime broker throughout your entire trading career, and your success compounds daily, weekly, monthly, yearly. And slowly but surely, your lot size increases. But you steadily bring in profits, conservatively with discipline. And they earn commissions for years and years and years. And you're happy to execute your trades properly. With low fees, everything, and you're happy. Everybody's happy. And if you're trading your money and your account's growing exponentially, you're happy, your spouse is happy, your children's happy, your neighbor's happy, your crazy uncle will show up at parties asking to borrow money. Cool, everybody's happy. McCall, Lawrence. Okay, so I'm trying to get you to succeed for the long term. Usually when you speak with a broker, they want to say, make as many trades as possible. Isn't that usually the message? Make lots of trades. Let's get together. Let's find a trade. Let's get some trades. Trade. We're sell it. Oh, no, buy it. Right? Isn't that usually the message? I'm trying to get you to trade conservatively with discipline so you find success for years and years and years and years, okay? So please, I'm just trying to get these messages across of how you can achieve your goal. Chasing price is not going to be the way to do it. So I've taken up a lot of time. I guess it's been an hour and a half, so I apologize for that. Okay? But I hope today's message is you realize that your success is achievable and obtainable. It's realistic. Okay? It might not happen quickly, but, isn't quick. Medical school isn't quick. I'm not talking about quick. Okay. So anyways, thanks for being a client of TradersWay. Thank you to Forex.today for hosting this. The video will be up later today. And to everybody, peace on earth. May the pips be with you. May your profits be above average. And I'll see you tomorrow.